Hello everybody, Luis here, and this is your weekly market update video to give you that non-biased, non-media based insight on where the housing market is at and where I feel it's going. Remember, there's no clickbait here, no doom and gloom. I research all the information and then I provide the data so you can form your own conclusion. And on that note, if there's anything you want me to confirm or research, just simply reply to the email. I know a lot of you replied or asked me about a headline from last week. Let me pull it up here. High credit score borrowers penalized under new federal mortgage fee plan. Or Biden raises costs for homebuyers with good credit to help risky borrower. First off, it has nothing to do with Biden or any political things. Let me break things down the way Fannie Mae and Freddie Mac actually posted. And these are the actual loan level price adjustments. Now, I'm going to just take two samples because we could spend 2 hours on just this table right here that I pulled up. I want to go over the 740 and above. Top part of this this matrix is loan level price adjustments before May 1st. And these loan level price adjustments are based on risk. So the higher the loan to value, the lower the FICO score, the more costly it is. Now let's take a look at this top row right here. 740 FICO score, 80% loan to value. I think this is one of the most impactful. 80% meaning you put 20% down, you get a hit or a fee, a cost of 0.25%. On a $400,000 loan, that's $1,000. Now, if you go, this is before May 1st. These are all the adjustments before May 1st. Now, coming into May, after May 1st, look at the same scenario. So we got a 740 FICO score. You have 1%, 80% loan to value, which is 20% down. You have 1%. So that's a $3,000 difference. Now this buyer needs to pay 1%, which is on a $400,000 loan. It's $4,000 versus $1,000. So that's a pretty significant change. Now, on the other end of the spectrum, let's look at the 659. It used to be 3.25% cost, which is $13,000. Okay, 13, if not a little bit more. So now after May 1st, it's going to be 2.5. So it did drop by about 4,000. So it does help that first time, or the person with the lower FICO score. Now, it doesn't mean that the fees went away for that person with the low FICO score. They're actually, I mean, they're still pretty hefty. I mean, this is 2.5% for having that FICO score. So it's significant. It just went down a little bit, and then it increased for the person with the good FICO score. Overall, it is going to help some more than others. And again, those that worked very hard at keeping their FICO scores up, they are being slightly penalized on this. And those that had some hiccups on their FICO score, they actually get a benefit from this change. Moving on, 10-year Treasury yield for this week. Today, it's at 3.52%, which it went down a little bit, which is good. This is what we're looking for. Last week, it was at 3.59%, as you can see here. And as far as economic news, Monday, Tuesday, Wednesday, there's no significant news. But Thursday, we have jobless claims again. And last week, we were at 245,000 new claims. And that was up from 239. So unemployment is on its way up. And we'll see what this week looks like. And the reason I keep talking about unemployment is because that has an effect on inflation. And the higher the inflation, the more likely the mortgage interest rates to go down. Also, we have the GDP advance for Q1. So this report is kind of like a preliminary of where the GDP is reporting at. This is kind of like the rough draft of this report. So they release it and then they'll make the adjustments within the next few weeks. GDP measures the growth of the economy. So if this number comes in lower than expected, then that means the economy is shrinking, which is great for inflation as well. So it's all about inflation. Then Friday, we have core PCE inflation, which again, if that shows that inflation is trending down, then that's going to help us with the mortgage interest rate. Speaking of mortgage interest rates, let's take a look at mortgage rates today. This is a $500,000 purchase, owner occupied single family residence, 740 FICO plus. We're going to start with the VA. 5.625 is where the rate is. So it did drop about 0.375 from last week. So this is good. We're trending down. The FHA is 5.625% as well. And that did go down 0.375 as well. So it was at 6%. And then finally, conventional, we got 6.625. And last week it was 6.375. So there's just a slight 1/8 decline or decrease in rate here. So across the board, yeah, rates have been dropping slightly. And I have a short video on the buying at a higher price with a lower rate versus buying at a lower price with a higher rate. You can't really have both. And I've been having those discussions lately where I have buyers that are saying, well, I'm going to wait for the rates to drop. Well, as soon as the rates drop, the buyer demand is going to go up because everybody's waiting for that. And when the buyer demand goes up, the price of the home goes up. Now you're buying that at a higher cost and or a higher price, and you can't refinance that debt out, like eliminated. What you can do is buy at this current market price and then refinance the rate later so that your payment could drop. Bottom line here is stay the course and make sure you're buying for the right reasons. And I can't stress it enough that it's such a fantastic time to buy if everything lines up. And that is all I have for this week. Follow me on Instagram at Renteria_home loans for the daily home buyer tips and day-to-day update. Again, reach out if you need anything or simply want to say hi. I appreciate you all and have a wonderful week.